Hello, friends. A very good afternoon to all of you. Once again, a warm welcome to all of you in today's live session. It has become a new normal in my life to come and see you all through this Facebook live session every Saturday, sharp at 12 o'clock. And also, I'm pretty sure you all are joining me for my morning videos as well. I try my level best 4 or 5 days in a week to get in touch with you through some little motivational videos every morning. So the simple idea behind that is that I feel happy with that. I really enjoy making those videos. And also, I'm getting some feedback from friends like you that many of our friends, their kids, their family members, or their friends, they get motivated with those videos. And many of us have changed our habit of getting up early, as well as some of us, I can see, are going out for some physical activity as well. And also, many of us have started making those videos as well, which are helping to spread a positive message all across and creating a good positive atmosphere during this situation of COVID-19. The good news in our surrounding is that recently Mississauga has almost zero cases in one day. Even Brampton is doing better, and overall Ontario, as well as I would say Canada as a country, we have really performed well during this COVID-19. Of course, this was a world level problem, but coming out of this problem with flying colors, this is what we all are expecting, and this is all what we hope for. So, friends, today's morning session, I was talking about an amazing person who really sent me wonderful comments yesterday. Because yesterday I talked about flowing water, which really gives us a very strong message, and today I talked about mountains. All this beautiful piece of nature gives us a very strong life learnings, but it all depends upon us how we adopt and practice those life learnings in our day-to-day activities. But I personally feel we need to stop ourselves and look towards nature to give us power, to give us energy, and to give us strength to keep moving, keep growing, and keep getting successful. So today's live session, we will be talking about how to get 20% ROI in real estate. This session is very ideal for the new investors, those people who have not tried their hands on real estate investment. I can very well understand seasonal investors. They know all these, tricks of the trade, and they understand all the calculation, and that's why they have been doing that amazing part of their life where not only they are building up an empire for themselves, but for the next generation as well. So I will be bringing up a lot of numbers, data, and stats as well in my coming sessions. But today we are going to focus, especially to the new investors, that how they can get 20% return on investment in real estate. Many of my friends, they are in stock exchange. Some of us believe in RRSP, RESP, mortgages, second mortgage, private mortgage. So all those are good ways of making some investments. And I have seen some of the people, they like putting money in bank, which I'm not too sure, but as per my understanding, it doesn't make too much sense in Canadian context, because I will share that with all of you. So let's move on to our session. How is it now? Can somebody give me a feedback? Can you hear me? Okay. Is it good now? Huh? All right. So I think we are back onto the track. I so let me share. Huh? Sound quality me? Can you hear it? Perfect. All right. So I hope we are good in terms of our sound quality now. But if there's any problem, please don't hesitate to send me a text message at 647-225-5780. So in this example, this is what I was talking to all of you. Uh, so let's consider the scenario that you bought a property which is approximately 600,000. Now you pay 20% down payment, which is $120,000. So this is an ideal scenario which I am expecting when we all are making an investment. I always advise to put at least 20% down payment over there. Now our remaining mortgage balance is approximately 480,000 in case we are putting 20% down payment. Now the approximate mortgage amount, because when we go for a 20% down payment or more, we qualify for a 30-year amortization. Now in this particular example, I have put a rate of interest which is 2.5%, whereas in today's scenario, our rate of interest is much lesser than 2.5%. There are banks who actually gives the mortgage at even 1.75% as well. So, but this is what my suggestion or my way of advising to my clients. I always recommend them whenever you are looking for your expenses, consider 10% higher. And whenever you're looking for your income, consider 10% lower. So if you apply that formula, you will never ever have problem in your investment because you are already having a margin of 20%, 10% high in the expenses and 10% lower in the income. So that gives you a 20% margin. And if there is any unforeseeable circumstances which you have to face, that can help you to cover up the gap. So with 2.5% rate of interest and 30-year amortization, you give approximately $1,800 in your mortgage. Now, again, this is just a rough calculation to explain you the concept. Out of that $1,800, you are putting approximately $800 to $900 into your principal, and $900 is going into your interest. Now you are paying $400 into property taxes. I'm getting some feedback that the presentation screen is half. The only reason behind that, friends, is if I put that as a full screen, I think we're gonna lose the voice quality. I know that's okay. Let me try, and I would request some feedback. So we have to live with half screen, friends. All right. So I think we have to live with half screen. So let me recap this example one more time. Uh, you bought a property for 600,000. You paid a down payment, which is approximately $120,000. Mortgage balance is 480,000. Approximate mortgage amount $1,800 with 30-year amortization at 2.5% rate of interest. And as I explained, I have put up a very high rate of interest considering today's scenario. Mortgage or principal payout is $900 and $900 goes into your interest amount. Now we pay property taxes, which is approximately $400. In this particular example, now we consider that we rented out that property approximately $2,600 a month. Utilities are paid by tenants, as it happens in most of the cases. And so I have put up another factor, which is repair and maintenance, approximately $150. So that $150 actually covers over, I would say, vacancy rate as well. Because if I look at it, like I'm putting up almost like 5 to 10% vacancy rate. So that part is, I think, good to cover both the aspects. So we have got $2,600 rent. We have paid $1,800 into mortgage, $400 into property taxes, and $150 into repairs. So that gives me a positive cash flow of $250 on that particular property. Now, I would even consider, let's say, argument's sake, I say our cash flow is even zero. Even then, I don't mind. But at least $250 cash flow is there to understand this example. Now, $900 we have mortgage payout, which was going into your principal. And I always say this money we are taking from one pocket and putting into another pocket. And $250 is my cash flow. So on an average, my saving onto that particular property is $1,150 a month. Now, how much that makes per annum is $13,800, which is 11.5% ROI. Now, until now, I have not even talked about appreciation in the property. So this 11.5% return is just that money is going into your principal as well as the extra cash flow you are getting from property. So that clearly gives 11.5% ROI without any appreciation in the property. Now on the other side, let me ask you a question before I move to my next slide. I'm pretty sure many of our viewers, they are in this country from last 5 years, 10 years, 15 years, or even more than that. And everybody have been watching this real estate market, what exactly has been happening in the surrounding. Let me ask you a question. What do you think is the average appreciation on properties in GTA and surroundings? I would say whole Ontario. I would share the recent stats with you. In spite of all this COVID-19 situation, market has gone up more than 10% in the month of June. So if I ask you that question, what is the average appreciation we have on the property? I am pretty sure all of you will give me an answer on an average 7 to 10%. And I think that is a very realistic number. But as I explained to you earlier, my formula, my suggestion for the investment is always calculate your income 10% lower and your expenses 10% higher. So let's apply the same formula here as well. So Aju, I think, sent an answer. He says 15% appreciation. Aju, I really appreciate that. But okay, let's be very realistic. let's consider 7 to 10% and apply the same logic which I was putting up there, that on an average, property goes up 7 to 10%, but we're going to reduce it by another 10%. So I am considering for this example 5% property appreciation. So we bought that property for $600,000 and our property got appreciated by $30,000 a year. And I'm pretty sure you still remember there was $13,800 annual savings, which was part of our principal, which we paid in the mortgage, and our cash flow. So that makes total $43,800 return on investment in real estate. $30,000 appreciation, $13,800 cash flow plus principal payout. And we made a down payment of $120,000. Of course, there are some closing expenses into that, which is on the tune of, on a $600,000 property, I would say approximately $10,000 to $12,000. But I have not put those numbers into this calculation just to make it very simple. Because as I explained, this presentation is for first-time investor, and I don't want them to be confused with lot many calculations. So I'm just trying to make it as simple as I can. So if I just apply a simple mathematics over there, that 30,000 appreciation in the property, 13,800 cash flow plus principal payout, and our down payment was 120,000. The total return, total annual return, which I look at my investment is 36.5%, which I think is really, really amazing in Canadian context, where there is no other investment which really generates on an average not more than 5 to 10% return on investment, and that too with a high risk. Now, what is the advantage of investing in real estate, friends? At least you have your house with you. Now, there are many of us who might come up with the logic that market can crash any point of time. I am listening that from last 10 to 15 years, friends. I came in this country in 2003, and from that until today, there is a group of people who will keep talking market is going to crash, going to crash, going to crash. And trust me, if you go and check with them, they might have 3 or 4 properties with themselves. So what is their reason? Why they keep talking negative about it? It is not that they want to convey a negative message. It is sometimes, people are very skeptical, or they just keep talking like that. So I'm pretty sure I didn't explain you any rocket science. I just explained you very simple calculation and numbers. And I think I have put very realistic figures over there for a common man to understand how we can get 20% return in real estate. Now, in this particular example, our return is coming almost 36.5%, which I think is really amazing. Now, we will prove the facts and figures with some live examples, because you might come back to me and say, Raman, all these numbers are hypothetical. But I think it is always a good idea to pick up a realistic scenario. So in this particular scenario, I am picking up a property which was closed in August 2016, which we bought for one of our investor clients, and sold in August 2020. So approximately 4 years. And you can very well see this is the data I pulled from Toronto Real Estate Board, and this is one of our listing. So the purchase price, as you can see, was $651,000. Closing cost approximately $9,765. So total cost was $667.65. Selling price of that property after 4 years was $875,000. We put 5% selling cost, which, as per my understanding and as per my formula of investment, I put it on higher side. And you all understand most of the time your selling cost is going to be lesser than 5%. But I put it 5% over there. So the money in hand which came is approximately $831,000. Property value gain in 4 years, 170,000. Mortgage amount, 80%. ROI calculation purpose, 520,000. Annual mortgage was paid approximately 27,186. Property taxes was $4,400. Approximate annual rents, $36,000. This is a good size house, and on an average, you can get that much rent from this property. So if you look at all the numbers, now in this particular calculation, we have put 40% money accumulated into the principal. So if I look at equity saved in 4 years is approximately 43,000. So now if I look at total profit in 4 years is 231,639, which contains your equity plus your gain plus your cash flow. Initial investment was 139,965. Annual ROI in this particular case is 41%, which is much higher than what I am suggesting you could be a very good return in Canadian market, which was 20%. So you can very well understand with these numbers, friends, and try to realize the power of real estate investment. And I think that can really create wonders for you. Now, that's another example which I will quickly go through. Now, this particular property was sold within 1 year. And I would rather say less than 1 year, only 8 to 9 months. The seller retained this property, which was on 29 Feeder Street, bought for $750,000. And you can look at all the numbers. After almost, I would say, 9 or 10 months, this property was sold in the market for $827,000. Again, in this example, it is 5% selling cost, annual mortgage 80%. So there was some negative cash flow in the property. Equity saved in 1 year was approximately $12,000. So profit in 1 year, $34,000 after all the expenses. So you can very well see into this particular example, even after selling this property after 9 months, you can very well see there was more than 20% return in this particular example as well. So friends, I don't think so I have explained you any rocket science. I have just simply crunched basic numbers, which in my opinion, even a 10-year-old kid can do that number crunching and can understand the power of investing in real estate where you are getting more than 20% return. As I always say, my job is to educate you, to bring you the facts and figures in front of you. Of course, decision making, it is your choice. It is up to you what you want to do with your money. I can share with you what I have learned in my life. And this is what I learned when I came into this country. There are 2 or 3 major expenses which we incur. So let me first get out of this screen, and also I would like to request Sachin as well to come and join us for today's session. And Sachin, if you are by chance watching today's show, please join me so that we can have some more question answer session as well as a little discussion. And thank you, friends. I am getting a lot of questions over here on my phone. So I will be answering all those questions one by one. But in case if you have any of your question, don't hesitate to send your question on my cell phone, which is 647-225-5780. I know many of us are putting our questions on social media as well. But friends, sometimes I get problem because this is being streamed on 3 or 4 channels, and I'm not able to see all of them all together one time. So please make sure You can also put your questions on the Facebook, on my Facebook page, as well as send me on 647-225-5780. So I was explaining you what I learned when I came into this country, that there are three major expenses which a new immigrant has to incur. On an average, husband and wife starting their life in this country makes, I would say, $7,000 to $8,000. So husband is doing a job of 4,000, wife is doing a job for 4,000. So on an average, $8,000 job. Now out of that 8,000, if you go and live on a decent accommodation on a rental, even today you get basement apartments for, I would say, $1,300 or $1,400 minimum. So if you look for a 2-bedroom apartment or a 3-bedroom house, you will end up paying, I would say, $2,500 as your rent. So I learned that out of 8,000, $2,500, which is, I would say, more than 30% of your income is going into your rent. Now the second thing is, almost 25 to 30% of your income is going into taxes. And your car expense, your everything what you buy, you have to pay HST. That takes another 15% of your income. So in a nutshell, 30% on your rent, 30% in your taxes, and 15% on HST as well as your car and other insurance. 75% of your income is gone. You are left with only 25% of the income to live your day-to-day life and to do whatever you want to do for your kids and all that stuff. So what I learned, that if I want to save that 30% income which I'm putting in rental, I have to become a homeowner. So that is how I get rid of that rental income. Of course, taxes you cannot skip, but I can share a good way of saving some taxes. Incorporation is a good way of saving taxes, my friends. So if you have an opportunity where you can incorporate yourself or you can incorporate your business, I would strongly suggest you. The simple reason behind that is, if you are earning the same amount of money as your personal income, you pay almost 40 to 50% tax. And the same amount of money if you earn in your corporation, you pay 15% of tax. So there's a big gap of almost like 30 to 35%, which you can definitely spend that money on growing yourself or growing your business or living a good life for yourself. Of course, HST and your car insurance, you cannot skip those expenses in your life. So my learning of life, my understanding, real estate is a good way for all of us to make money. And real estate investment, I call that as a forced saving. So friends, there are a lot of questions which I am getting on my phone, but we will also welcome our COO, Mr. Sachin Gupta, who has been joining me from last couple of sessions. Sachin, first of all, I really like your t-shirt.
Thank you very much, Raman. Good afternoon. I'm so sorry I'm not professionally dressed today, as I had something scheduled up. So,
No, believe me, it's a beautiful color, and it's very. I think this color suits to today's atmosphere, because outside it is almost 40-degree temperature. It is a heat warning
oh
outside.
yes, it's a heat warning outside. But I hope all our viewers they're enjoying this summer season, because summer is one thing that we should not complain of after having such a long winters.
For sure, for sure. So Sachin, I think I would like to spend a little more time today on question answer session. I have
Yes.
like 7 questions which I have already received. Do you have anything which you want to share first, or if you have any questions with you, I can
So
definitely.
I joined Raman, but I understand that today topic is the return, 20% return on our investment. I have been doing investment, and I have got so many clients who are doing investments with me for last around 7 to 10 years. I always tell all my investors is, when you are investing money in real estate, the expected return you should expect is around 15 to 20%. Anything on top, I understand that sometime in last, especially in 2017, between 2015 to 2017, the kind of market we were in, people were getting enormous returns. The kind of return we were getting was anything between 50 to 100% depending upon the situations. But those are dependent upon the particular situations. We should not, as an investor, we should not be expecting those kind of return every time. The challenge comes in when just because we have made those kind of return in single property, and we expect that that can be done and that can be in every property. That's not possible. But yes, what is possible if you are making the right decision, if you are choosing the right property, 15 to 20% return on your investment is very much achievable in real estate. And the most important thing is this, that there's a important, I would say, caption for real estate is that if you can hold, you make money in real estate.
So, Sachin, I think you have given $1 million statement, and this is what I always recommend to my investor friends. Friends, you do investment when you have money in your pocket. Sachin, I have a
Yes.
very interesting question from one of our viewers. His name is Messi. So, Messi sent me a question, Roman. So, if I go by your calculation where you are telling me 20% return on each property, do you think that trend is going to continue for another like 3 to 4 years and we'll be making the same kind of return on investment in real estate? Messi, that's a very interesting question. Now, let me tell you something. Let me give you another formula. I always tell my people, as Sachin was explaining, the return can go higher than 20% even. But I will share my experience with you. So if you're buying 10 properties during a course of like 3 to 5 years, I would say, or whatever, depending upon your capacity and capabilities, out of those 10 properties, 2 properties are going to behave like gold for you. Those 2 properties can make maybe 60%, maybe 80%, or maybe even 100% return on your investment. Out of those 10, 4 properties are going to be like a silver for you. So what does that silver means? They will give you an average return, 20 to 30%, maybe 20%. And there could be another 2 properties, which gives you like a bronze. So when I say bronze, so maybe your return on investment could be 10 to 15%. And friends, please try to understand, you are making an investment. There could be one property which might, you may lose a little money out there because sometimes you need a cash flow. Sometimes you did a little, I would say, not a wrong buying, but market has turned like anything. So that situation can also happen. But if you have an holding capacity, I can guarantee you, you can never ever lose money in real estate. That is the first thing. Second thing is, if you have a good realtor on your side, trust me, if in buying and selling, you can make $50,000 difference. And there's a very famous saying, you need to have a good realtor, a good doctor, and a good lawyer on your side, and your life is amazing. So I have a good lawyer on my side, I have a good doctor on my side, and of course, I have a good realtor on my side who is joining us today in pink t-shirt.
And there's one more saying, Raman, that you might change your lawyer, you might change your doctor, but you should never change your realtor if it's a good realtor.
Sorry, I would respectfully disagree with you. If you are not dealing with same-max, you should change your realtor.
I do agree. That's what I meant by a good realtor. That same as realtors are good realtors.
Of course, and friends, that was just on the lighter side.
Yes.
Of course, like there are so many good realtors out there in the market.
Yeah.
Of course, my job is I have to promote myself. There's nothing wrong in it, friends, right?
Yeah.
So, Sachin, I have 2 more questions here. Should we
Yeah.
invest in condo or freehold? Now, guys, this is a very interesting topic, and I think we should do a separate seminar on
Yes.
this. That either we should invest in condo or we should invest in freehold. Now, to this question, there's no standard answer onto this.
Yeah.
So it all depends upon your particular situation. And depending upon what kind of portfolio you carry, what kind of investment you have, what are the total amount of money which you want to put in. So condo and freehold both have their own disadvantages and advantages. So I would not say one is better than others. Of course, it all depends upon where you are buying a condo. But I would always strongly encourage to make sure to get a professional advice before you make that kind of decision. Because not every market is good for condo and not every market is good for I would say, freehold houses. So to answer your question, I would say it all depends upon your individual situation, which I am more than happy and willing to sit with you and discuss with you, and I can explain you. Now, the next question I have from Lally. Lally says, "Do we see interest rate hike in near future that can affect ROI you have shown?" So, Lally, I'm pretty sure if you were watching the session before, I have mentioned the rate of interest, which was 2.5% over there. So I have already covered and another 2 or 3 increments in rate of interest, which I don't see is going to happen in near future. So at least for next 2 to 3 years, you don't see rate of interest going up by 1%. And even if that happens, I strongly encourage and recommend you. Today, we should definitely consider getting the fixed rate mortgage because the rate of interest are really that low and you can get a very good fixed rate on your mortgage, which is going to give you a safety for 5 years. And of course, if you're carrying an investment property, you will be good enough for next 5 years. Sachin, the
And
next
to
question. Sorry.
to add on to that, if you're getting there are feeders coming from the Bank of Canada that even Bank of Canada do not foresee that the interest rates are going to change or go higher in next 2 to 3 years. The kind of situation we are in right now. So for next 3 years, we don't see the interest rate going up anymore.
Absolutely. Sachin,
Yes.
even if, let's say, for argument's sake, the rate of interest even goes up, it will not be more than, I would say, 0.25% or 0.5%. But in
Oh
our
yes.
particular example, we have covered almost like a 0.75% gap. And I would again re-emphasize on my theory, when you're making an investment, please make sure calculate 10% more when you're calculating expenses and 10% less when you're calculating your income. And you will never ever have problem in getting a good return onto it. Sachin, I have an interesting question from George. So George says, would it be advisable if I make an investment by borrowing money from any of my friends or family members? And if I borrow that money on 5% and get a return on 20%, that will give me on an average 15% extra money. So Sachin, I think George's question is very interesting.
Yeah.
But in this, again, I will put a note of caution. It all depends upon, friends, what kind of risk-taking capabilities you have.
Yes.
I don't suggest normally to people to borrow money to make an investment. But yes, there is nothing wrong into it as well. If you know what you are doing, and I think that is very, very important because majority of the time people, they don't know what they are doing. So if you are getting some money on 5% from somewhere, either it is your friends or family member, and you're making 20% return. And Sachin, if I'm not wrong, I can recall a previous session which we did on the same thing,
Yeah.
where we talked about that if you are getting the money from your line of credit or from some other source, there is nothing wrong making 20% return and paying 5% interest to others.
Yeah.
So,
So only
but
only thing Raman over there is that we again the idea is that I will not encourage people to speculate. Right, you should have some strong footing over there. Wherein even if you are borrowing money, you should know that how you need to repay that money.
right. Sachin, I have another question from Aju. He says, gain is down payment plus rental income plus property value. So Aju, I will rectify it a little bit over here. Gain is not down payment. Gain is what we are getting. Whatever mortgage we are paying some part into the principal. So we are considering that principal. In the rental, we are not calculating the whole rental income. We are just calculating the cash flow. So it is money which you put in your equity, the cash flow which you generate after paying your mortgage and paying your property taxes. Of course, utilities is paid by the tenant, and principal amount which we grow in the property. So these are 3 factors. One is your accumulation of your equity in the property. Second is your cash flow. And third is your appreciation. So these are the 3 factors which we calculate to count to get the right return on investment and whatever money we have invested into the property. Again, it all depends upon that. Now, I want to also emphasize on one more point, Sachin.
Yeah.
What is the beauty in Canadian real estate market is that you are putting 20% down payment, or in some cases 5% or 10% down payment,
Yeah.
but your property is growing on 100%. So if you
Yes.
bought a property for 500,000 and made $100,000 as a down payment, you are getting an appreciation which is 5 times more than the money which you put in there. So if I just consider the inflation, which is little over 2%, in any case you are going to get 10% return on investment on your
Yes.
property,
Yes.
right? Forget about any
And
other thing.
and on a very conservative side, wherever you live in Canada, the average appreciation that you get is approximately between 5 to 7%. Again, that number goes higher if you are in GTA or any particular neighborhood of GTA. But average appreciation you can look at is 5 to 7% on the total value of the property, which would turn into around 15 to 20% on your investment that you have done towards the down payment.
Yes. So Sachin, I would also like to mention few of the people who have joined us today. I can see Aju here, I can see Siddharth there, I can see Gary, I can see Preet, I can see uh, Raja, I can like, so there are so many people who have joined us today. And friends, there are a couple of more questions, but I think we have to be careful and respectful about the time. We are already at 12:49. So Sachin, we are left with only 11 minutes for today's session. I would also like to re-emphasize a little bit on the game changer model, and I know you are working very diligently, very, I would say, religiously, and you're putting a lot of time and efforts from your side to ensure we bring something fantastic for the real estate industry. So I would give you 2 minutes to talk about the game changer model for our realtor friends.
So, Raban, again, that is our dream project. I would say that's my dream project that I'm working on right now. SaveMax game changer model. Okay, I have so much belief in that model that this is going to be really a revolution in the real estate industry in Canada. And when I'm talking about Canada, I'm not being specific to GTA. I'm not being specific to Ontario. I'm going to talk about all over Canada for this, because though we're going to start it from GTA, but in coming time it is going to keep expanding. So I have mentioned this before. This game changer model is based on three pillars, and those three pillars are based on the challenges which are faced by the realtors in their whole working life. We have emphasized in this during COVID time is this: what is the challenge that a common realtor faces? A common challenge that any realtor would face is this: that every year they are doing good for 2 3 months, for 2 3 months they are average, and for few months they do not have business. Okay, they don't have any income coming to the realtors. The challenge is that realtors get paid only when our deals get closed. If our deals are not getting closed, we do not get paid. Okay, so keeping in mind, and second challenge is this: that at any given point of our life, when we decide to retire, there is no retirement plan for us. No, there is no government to help us. Our board has done nothing to support us during that time when we are retired. So there is no income coming when we are not able to sell real estate, when we are not able to go and show houses to our clients, when we are not able to list houses for our client. So there is zero income at that time. And third challenge is, if we are not there, what will happen to our family? Biggest fear that any realtor faces in today's time. So God forbid something happens to any realtor, what will happen to their family after that? Will they be able to have the same lifestyle which we are able to give to our family? Their lifestyle will go down. How it will be effective? That's the biggest fear. So on those three challenges, this whole model is based. In that model, we are taking care of a passive income. So even when the realtor is not doing their own deals, they are getting income from other realtors who are working in the same system, and they are doing the deal. The second thing is that when they decide to retire, they will still keep getting the income from that model, so that they can retire, they can go on vacation, and still their lifestyle will not be affected. And third, and that is most close, I would say very close to my heart, the third pillar, which is the next generation income. wherein, God forbid, which is the truth of the life, something happened to a realtor, their family has been taken care, right? That model takes care of the family so that their family can enjoy the same lifestyle what they had before. I know there is no way we can replace that person. There is no way we can do that, but at least what that model assures is that their family will get what they deserve. So that model is based on those three pillars. We are working really aggressively for that right now. I'm working on getting the technology to implement that model. Though we have implemented that within our SaveMax system, and every realtor is talking about that. So I'm very optimistic. I'm very enthusiastic about that model. Anybody who wants to have information about that, please call any of the SameX realtors, any of SameX team leaders, or they can call me on 647-219-3914.
Thank you, Sachin, for sharing that valuable information. And again, I also would like to contribute and add a little bit into this. This is a strong message which I want to convey to all my friends. Friends, we are working on this model with utmost honesty and sincerity. And we have a very clear intent. We want to make sure we change the dynamics of real estate industry. I have a dream of my life. I want to have 1,000 millionaires in next 5 years by 2025. And me and Sachin, we were talking about this thing during this COVID-19, and we were trying to understand the challenge of the real estate industry, where if we as a realtor don't get income for 1 or 2 months, what happens to our families? What happens to our living style? Because we have our fixed expenses too. But unfortunately, this kind of situation can happen with anybody. And we were doing this thing in our existing model. So we thought, why don't we put it in a more structured way, and we let so many other people take advantage and benefit of this situation, this system. Of course, we went to the next step as well, where we have made sure that we take care of our people even after their retirement. And not only we stopped there, but we have gone to the next level to take care of the families. Even that unfortunate situation happens where our loved one, somehow they leave us. So this model is definitely close to our heart. And I want to say a special thanks to you, Sachin, the kind of efforts, the kind of day and night working which you put on putting this model on paper and bringing the best out of it. I still remember on those days when I was talking to you and I was putting a lower number as a benefit to realtors, and you actually came and fought with me for almost 2 days and convinced me to put almost the double number to benefit the realtors. So
Yes.
I really appreciate all your enthusiasm and the energy which you put into the system. And friends, if you want to know more detail about our game changer model, Sachin is the best person because he really put a lot in putting up this model together. And we are not only expecting, but I'm pretty sure this model is going to be a game changer of the real estate industry. Sachin, I have gotten another important question from one of our previous investor, a close friend. I
Yeah.
don't want to miss his question. Varun sent me a question on Facebook as well as he sent me a question on the text message. How does pre-construction compared with resale in terms of investment as an investor? In pre-construction is putting even less than 20% down payment. Varun, you are absolutely right, and that is what I was talking, that pre-construction and resale both have their own advantages and disadvantages. Of course, in pre-construction, you get less headache because first of all, you can take the leverage of money. You don't have to put that 20% down payment all together on one shot. You are not worried about 3 to 4 years about the tenant and all that stuff. But you have to keep one thing in your mind. There are always pros and cons of both the situations. In pre-construction, sometimes it happens the project get into into a trouble, and this happened to a couple of projects. So we have to be very thoughtful and careful about which project we are putting our money into. Second thing is, when you are in pre-construction, you don't start getting the rent from the day one, right? So again, there are advantages and disadvantages, and of course, in resale, you have to put all that 20% down payment in one shot, whereas in pre-construction, you are putting that money in maybe 2 or 3 years. And during this COVID-19, I have seen most of the builders, they came up with very creative, deposit structures. 5% in 1 year, 5% in second year, 5% in third year. So it makes life so easy. So Varun, both of the things, it all depends upon your situation, and I'll be more than happy to sit with you to explain you and discuss with you in detail. But Sachin, we are getting close to our time. It's 12:58. We have only 2 minutes left. If you want to take 1 minute, because I need 1 minute to tell people to share my Facebook page with others, Rise with Raman, as well as subscribe my YouTube channel, Rise with Raman as well. In that, we stay connected early morning, as well as all these live sessions get aired over there on my YouTube channel and Facebook page as well. Sachin, over to you, please.
So, Raman, I'll take 60 seconds only, and I'll give 60 seconds to you. So, I know before this question, you were talking about, I fought with you for getting the number increase for the realtors, right? And that's the one more reason that this project is so close to me, that because this is the first time I'm able to convince you on the numbers. Otherwise, you were always able to convince me on the numbers.
No, good, Sachin. And I think real estate is all about numbers. And if
Yes.
numbers make sense, you can never ever go, my friends.
Yes.
So,
So
friends, thank you very much.
before Raman says that, as far as today's session is concerned, again, the last word of advice from my side is that do not hold yourself from buying the real estate. Buy a real estate and then hold it.
So, friends, thank you very much for joining us today. I'm pretty sure today's session might have given you a little thought process, especially to new investors. And I would seek your guidance and feedback about today's session. Please don't hesitate to send me a message on my Facebook page or through Messenger or on my cell phone, which is 647-225-5780. And don't hesitate to share this with others. It might help somebody else to convince themselves on making some investments in real estate, and they may come back with a box of sweets and say thank you to you. Wish you good luck. See you next week with another interesting topic. Have an amazing day. Spend a lot of time with your families. Stay safe. Of course, all the businesses are open, but COVID-19 is not over yet. So make sure maintain physical distancing and enjoy time with your families. Have an amazing weekend.